Reversed early losses against the dollar yesterday. Optimism that Eurozone countries are dealing with their debt situation boosted overall sentiment when it comes to risk. Are we looking at short-term reprieve though?
Morning, Alishia. Well, the rand really benefited on two fronts. Firstly was the Eurozone developments that you mentioned. Italian Premier Silvio Berlusconi has agreed to step down according to reports, and that's led to some optimism that Italy will also begin to get its house in order with regard to its fiscal situation. So that was one factor. The second one, of course, was this morning's release of Chinese inflation data that showed a slowing in CPI in China as well as in PPI, and that's also led to some optimism in markets. There's talk now that gives room to Chinese officials to start to ease policy. They've been tightening policy since 2010 as a property market in a bid to try and cool the property market in China. So this latest development has led to speculation that they may go as far as easing monetary policy, and that of course has positive global growth implications, which then plays into sentiment, and that's why we've seen the rand strengthen. But as far as whether it's a temporary reprieve, we certainly think so. Our base case scenario is still for the rand to depreciate. We still maintain our year-end target of 820. We think that, while things have calmed down in the short term, until the Eurozone debt crisis in particular is resolved and then finalized, there will always be, or in the interim, there are likely to be these flares of risk aversion that are likely to impact on the rand.
Of course, in a scenario where we know that the European situation is one that's not going to be solved overnight, and with Europe really putting a damper on the global growth outlook still, let's look at what this means for the South African economy, because right here in South Africa, we're anticipating all-important manufacturing data today, and that would round out the Q3 number then and have GDP implications.
Absolutely, Alishia. Europe is one of our key export destinations, so to the extent that the crisis drags on and begins to weigh on growth, that is certainly going to have implications for South Africa. In fact, we think that the risk of a recession in Europe is rising, and we're expecting the slowdown there to also be reflected in today's manufacturing numbers. We saw a big bounce in manufacturing production in August, but we believe that that was largely related to the fact that it was a rebound from the depressed numbers that we saw in July. If you recall, in July there was widespread industrial action in the sector, which then depressed that month's output figures. So we think that August was a temporary blip. We're expecting a moderation in production growth for September. We've penciled in growth of about 4.6% year on year, and we still see some downside risk to that forecast.
Yeah.
As you mentioned, that would then round out the Q3 numbers, and we'd be able to then take some infer into that some expectations for Q3 GDP.
Is that pretty much, Nomvuyo, what's influencing Standard Bank's view when it comes to where interest rates are headed tomorrow? We've got the SARB concluding its monetary policy meeting, and the consensus when you're looking at broad markets is that we're going to see rates remain on hold. But from Standard Bank's perspective, along with Goldman Sachs, it seems that you guys are penciling in a 50 basis point cut.
Yes, Alishia, we have recently amended our view to reflect a cut at this MPC and then another one early next year, and then we see rates remaining on hold thereafter. And that's really based on what we see a deteriorating growth outlook, where, as I mentioned, we see rising risk of a recession in Europe and potentially also in the States. And that's, of course, going to necessitate, should it come about, is going to necessitate a downward revision in expectation for South Africa's growth next year. We've already downgraded our expectations for next year to 3.1%, which is only mildly better than we saw in 2010, and we were only recovering from a recession at that point. So as far as South Africa's growth outlook is concerned, should we see the recessions that we're anticipating on both sides of the Atlantic, the situation would certainly be quite bleak domestically, and we would think that certainly these developments warrant an interest rate cut.